What's up, guys and gals? Anthony here with Special Analysis. Hope you're having a wonderful day. I want to talk about the technical setup that transpired yesterday on the NASDAQ. Let's just say, hypothetically, you're not a profit pack owner. Let's say, hypothetically, you missed the profit pack entry. Let's say, hypothetically, you were hesitant to take it and you were looking for that technical confluence with that entry. Okay, all these things are real life scenarios that traders go through their mind. So how do we layer in the technicals? How do we layer that into giving us confidence to take the trade? And that's what we're going to talk about today. I'm going to talk about the components that I very specifically look at. I'm going to talk about how you could have exited this trade at almost the very tippy top of the move. So stick around. Give me a few minutes. If you like this video, I encourage you to click that button. If you're not catching these videos on a regular basis, I invite you to subscribe. And if you want to check out my website, there's a whole bunch of information down below the video, training webinars and such that'll just help you and your trading get to the next level. If you have questions or you would like a 100% free, no obligation trading consultation, I encourage you to email me. That email is below. I've been trading for myself now for about 12 years, and I've been helping traders now for about the past 4 or 5. It's become a full-time endeavor. It was at first trading took over my my income, and then I decided that I wanted to give back and help others. So in doing that, it's just kind of transformed into more than I bargained for in the beginning. It was just about helping people, and now there's a real demand for it, and I'm grateful to have the opportunity to serve other retail traders and give them the chance to succeed as well. So let's jump into the chart. Let's take a look at this. This is the NASDAQ 100 from Friday, October 6th. Morning was certainly a rough start. We had the jobs report number come out at 8:30. The market just took a tank. I mean, listen, if you're not a news trader, which I'm not, I always advise my traders, just step out of the way. Like, let the market have its reaction. Be patient. It may take a little while, but there's normally a significant move to transpire afterwards. So initial reaction, jobs market came out really strong. Market shits the bed. It does that because, the market sees that the Fed has the confidence to continue raising interest rates. The market likes a low interest rate environment, so there's a negative effect. But that doesn't necessarily mean that it's not a positive effect on the overall economy. The economy is made of 3 primary components: jobs market, real estate market, stock market. That's it, guys. Like, if you can understand those 3 components and you can have exposure to each of those 3 components, listen, you can be wildly successful and wildly wealthy. Well, I'm here to help you have exposure to the stock market component of the economy so that you can take profits out of the market with low risk, high probability, and consistency. Okay, so that's what we're going to talk about today. Today, we're looking at a technical chart. Let me show you how this kind of plays out here. We're recovering from the morning session, all the choppiness. Market impulses out, corrects back to the 8 and 13 EMA. Okay, this is a great sign here. Closes back above the 8 EMA. I mean, the reality is, like, this is really what looks like really kind of strong continuation here. Okay, so we got an impulse, we got a little bit of a correction, and I'm just kind of marking off what this looks like. So nice couple candle pullback. We close back above the 8. We break back above that candle right here. Boom, back up. Another impulse, another correction right here. Again, I already marked this one off, kind of pulled back in. But what we also did at this point at 922 here was we broke a prior high. 14,922 on the NASDAQ. We broke a prior high. You can see we closed above it, flirted with it, closed above it, pulled back, got that support at the 8 and 13 EMA, and then we just fucking ripped off of it. Buyers stepped in and they were like, you know what? We're in it to win it. Here it comes. So at this very point in time, what do we have? I have a checklist that I provide with my traders on everything that they should be seeing in confluence in order to consider a technical trade. So I'll walk through that. Supporting volume, we have that down at the bottom. Okay. We have the 15-minute moving averages favoring the move. The 8 EMA on the 15-minute time frame is above the 21 EMA on the 15-minute time frame. We're above the VWAP, and I use 2 VWAPs. One is a fixed VWAP, one is a rolling VWAP. You could see that they're right here. The orange one is the rolling The blue one is the fixed. Price does react to both of them. In a lot of instances, they run fairly close, but when price is trending, they do pull apart. So we're above both of them. Our fast EMAs are in sync. 21, 13, 8 EMA. Short-term trend is in existence, okay? It's happening. That's it. Long-term trend is favoring. Short-term trend is favoring. We go up here to the MACD. We got the histogram rising off of the 0 line, and we have the signal line leading the histogram, okay? Should be leading the histogram and the moving average right here. Having those things all in sync says, hey, this is what we would consider a lower risked entry. Our higher time frames in sync, our lower time frames in sync. We're going to have the opportunity here to potentially see the market go in our favor. And that's what happened. So you buy the market at the close of this candle right here, and we run very quickly into a daily pivot. What do we do with a daily pivot? We pay ourselves and we protect ourselves. We sell a small portion of our trade right here, maybe a couple contracts or whatever, depending on your position sizing, a few micros. And then you take your stop and you move it right there to your entry. Now, you have paid yourself something and you've protected the balance of your exposure. If this trade continues, great. If this trade does not continue, well, shit happens, but you still paid yourself something and you still protected the balance of your exposure to the market. Now, you just sit back at this point and you relax because you have another target up here where a daily and weekly pivot converge. And that doesn't happen for a little while. So from our entry here at 11:30 in the morning to our test of those overhead pivots didn't happen until about 1:20. Guys, that's 2 hours. But during those 2 hours, you have to have the discipline to just sit tight. You've already paid yourself and you've already protected yourself. Okay? Unless the market gaps over your stop, you're not losing any more money at this point. You've already just put a little cookie in the kitty and your stop's there. You have to now be patient. And this is where 99% of traders suck at life. They just can't sit the fuck still for a few minutes and let the market just continue to pay you. What would happen is, yes, you'd probably be okay. These next little push, you'd probably start to freak out on this candle. If you held through this, you'd probably be okay. And then you would have a fit because you would see that your matrix or your order queue was high and then it pulled back and gave back a bunch of money. You probably are freaking out and you're hitting the exit button right now. Close my position. Guys, you gotta be able to mentally hold through that. If you want big wins, if you want 800 plus ticks, if you want 5-to-1 risk reward ratios, you have to overcome that. Okay? I can't say that enough. Let the market do its thing. It kept respecting the 21 EMA. Yes, the 8 and the 13 got shitty here, but the 21 EMA held price action. As long as we're holding that 21 EMA, guys, the short-term trend is still intact. What happened here after this period of consolidation? Well, we pushed back up. We marched into those pivots. Guys, here's the next opportunity to sell another portion of your trade. Okay? This is where you get to pay yourself more. Pay yourself more right there. And then what I want to do from that point is take my stop from where I'm at my entry and I want to move it to the next pivot. That next pivot comes in right there. So now, if the market turns against me and shits the bed from here after we've tested this area, I am going to fall back to capture more profit somewhere here around 15,019. So no matter what happens next, price action's either going to pay me more or I'm going to still get paid more in my stop out. That's it. Now, at 14:33, that's 2:33 Eastern Standard Time, right here on this candle. If you looked at the S&P 500, you saw that we were approaching a daily pivot. Now, I advise my traders all the time to look at both the NASDAQ and the S&P. The NASDAQ will almost always be reactive to the S&P's technicals and the S&P's liquidity. So what would I have done right here? I would have sold a little more of my position. Just short of the top of the entire move, I would have sold a little bit more. And I would have tightened my stop up a little bit more. Where would I have tightened it up to? This last little pivot low right here. So now, either the market's going to keep going higher, or I'm going to get stopped out at this last little price action pivot low here, still respecting the 21 EMA. And no matter what happens, I am in the clear. Now, the market ultimately closed for the balance of the week. I would not advise holding over the weekend. At 4 o'clock, you just simply close the balance of your position right here. You didn't get any higher to this next pivot. You didn't fall back into your stop, and you closed the balance of your trade right here. So you took profit here, you took profit here, you took profit here, and then you closed the balance of your trade here. Guys, what a way to go into the weekend. This is basic stuff. These are basic indicators. These are basic technicals. These are all things I provide to my clients for free. I do all the hard work. All they have to do is follow the checklist, follow the trade plan. Listen, if they're not comfortable with my trade plan, they can modify it however they want. If they're not comfortable with my checklist, they can modify it however they want. I provide what I know works statistically over time to provide the lowest risk, highest probability setups. Is every trade going to work? If you listen to somebody that tells you every trade's going to work, you're a fucking idiot. Because that doesn't exist. The best traders in the world, the most sophisticated algorithms in the world, do not work every single time. But if you employ them properly and you have the discipline to let the trade play out, if you're willing to pay yourself and protect yourself, not be a greedy pig, not let your emotions overcome your common sense, guys, there is money to be extracted from this market on a regular fucking basis. If you're not able to do it yourself and you want some guidance, you can trade live with me. If you don't want to look at the technicals and you just want to look at the most simplistic indicator and technology setup possible, fine, we'll get you into the profit pack. If you want both, you can have both. I am offering you a 100% free, no obligation, 15-minute trading consultation. Tell me what your needs are, tell me what your failures are, tell me what your struggles are, and I will tell you if I do or do not have something that can possibly help you. Can I guarantee your success? No. The reason I can't guarantee your success is because most of you are not disciplined enough to hold the trade this long to capture the majority of this move. You're just not. Can I talk you through it? Yes. Can I beat it into your head over and over again? Yes. But at the end of the day, I'm not sitting at the computer next to you, and I'm not the one controlling how you manage this trade. And that's what it comes down to. So, next step is yours to take. Below this video, there's a couple links. There's my email if you want to request a free trading consultation. There's my website if you want to poke around, learn a little bit more about myself. There's also a link to a free training webinar if you have the time to sit there and watch it. Guys, it's not a sales presentation. Let me just be crystal clear. It's to prepare you for the next conversation so that we know what you do or do not potentially need or want to help your trading get to the next level. With that, I wish you a beautiful and blessed day. I hope that you are profitable. If you're not profitable, I'm here to help you. But again, the next step is yours to take. I'll talk to you in the next video. Take care.